Well, hi, folks. I'm here with Ivy, and we're doing your financial market update. Many of you haven't seen her in a long time. Remember, I could hold her in one hand? Remember, she's going to just be now having a birthday coming up. She'll be a year in a couple of months. But look at how big she's gotten, and she's a baby yet. So she will be one heck of a big cat, which is exactly what I was after. I didn't want anything small. I have other cats in the house. She's a monster, a beautiful one. Okay. Beautiful day today, right? What's the difference you're noticing in the market? The market changed gears on you over a week ago, and suddenly, instead of at the last hour or so, hour and a half of trade, if the market's down, the buyers come in and erase the losses of the day. We've saw that phenomena through most of January and February, early part at least of February to about the mid. Now what's happening, the market tries to recover during the day, and in the last hour, hour and a half, the market gets beaten up and thrown back. It's just what's happening right now. This was a losing month for the major indices. All three of the S&P, the NASDAQ, and the Dow down. Dow, I think the biggest, about 4%. At the same time, you can get 5% on your money on a 6-month T-bill. Can you believe that? Over 5%. I think 5.17 now. So that's interesting. Chairman Powell will be going to Congress March 7th. He speaks before both the Senate and the House, gets questioned on the state of the economy, and that will be super interesting. Can you imagine all the questions? What's going on? How high are rates going? How are you going to tip the economy over? Blah, blah, blah. Well, the simple fact is the policies haven't quite worked yet, but I'm starting to see the data weaken. If you were looking at today's PMI numbers, they all came in on the poor side. If you're looking at the Richmond Fed numbers, the whole manufacturing area there did a cave in. If you're watching the Chicago numbers, not as strong as they've been. So it's starting. So lag effects take time. It's the hardest thing to do this, keep your thumbs going like that, and you're waiting for it to kick in. I believe we're at that point. I think we're at the inflection point where now we're starting to see things. If you're looking at earnings, you're seeing them starting to question just where they're at. Automakers in trouble. Now tomorrow's Tesla, so you got to keep your eyes wide open. What kind of special announcement is going to come out of that? Mr. Musk regained being the richest person in the world. Mr. Arnault, you're number 2 again. And away you work with all that, seeing just what these things are going to do one way or the other. And of course, on Tesla, we're all waiting to see, are they going to do a Model 2 car? Coming out with something less expensive to really grab some more market share. I'd like to see that. When you look at the S&P, we have fallen back to the 18-week moving average of closes. This is a weekly area chart of closes. When we look at the daily bar chart, you can see how the market has been coming down. You have a pattern, and you've had it, of lower highs, 3 of them, lower lows, that's bearish. The market is fighting at the 200-week average down to the 100-week, and the Bollinger Band is right here with all 3. Does that mean the market has to hold this? It does not. The market can decide to latch onto this Bollinger Band and drive down if it wants to get even more bearish market information, and it's on the verge of having to make a decision. Does it stay oversold, or does it embed and lock in a downtrend? If it's going to lock into a downtrend, beware. You could be looking all of a sudden in this whole area right here very, very quickly. So don't be a hero in these markets. There's nothing bullish on these charts. The question is, are they so oversold there's not much left on the down on this leg? That's how I'm viewing it. Which one of those stories do we have? We are oversold, trend down. You can see where the Bollinger Bands are. And when you take a look right here in the macro Dow, now this one is trying to embed. Follow me. You can't count tonight, which is Wednesday night, but you can count Tuesday. That's behind us. Both numbers under 20. Both under 20 on Monday. Friday they weren't. Tomorrow's a very important day. So now we've got a market that if it decides to embed could add another leg. Now where's it going to make that decision? Right into the 200-day average of support. And you know tomorrow morning what's going to be said. Turn on Bloomberg. You know, here we are. We're back to that 200-day average. Turn on CNBC. Yep, We're at an important number. Are we going to hold this or not? This is going to be a real key. That's what you're going to hear out of the stations. And the question is, do they propel themselves from this level? If they embed, then I say yes, they do. Obviously, if you lost the embedded reading, I'd be saying, looks like you want to come back up there. But that's not there. Where you're at is, are you going to embed, which is bearish. In the Russell, not so, oversold. So the most bearish so far is clearly the Dow Jones, and that's the one I focus on. If I'm going to want to be a short, I want to sell the weakest of the markets. I'm not trying to sell the stronger of the markets, hoping it catches up. That makes no sense at all. When we come to the T-bond market, we have lower highs, lower lows, fully embedded. What do you think that means? It tells me the pros are just selling. Now, we might be getting a bearish crossover. I had one of my clients write today trying to show me a 200 and a 100 day as they're flip-flopping on each other. I don't consider that anywhere near as important as when you get a 18-day and a 100 or an 18 and a 200 day moving average. Those are what traders gear on more than anything else. You had that bearish crossover up here, and the market's not seen daylight with an embedded reading. Still bearish as I'm concerned, and I think the pros are putting orders in to be short. In the dollar, you were flirting today, big time this morning, with losing the bearish embedded reading. In fact, you had lost it intra-morning. But you don't want to get what Ron, one of my brokers, called stochasticitis, where you're watching every tick. Oh, is it going to lose it? Is it going to keep it? You'll go crazy. And you won't be effective doing it. It'll take up all your time. I used to do these things, I know. I don't bother with that at all. It's either going to lose it or it's not. What do I know? I know by 2 o'clock in the afternoon about where it's going to be. Why? That's settlement time. It trades till 4. Why am I wasting my time? After 2, I want to get very interested. I can then, if I want to enter the market or tell my clients to enter the market or you want to enter the market, there's many variables you can go with. That's when if you lose it, you're doing something. You haven't lost it yet. So we can see where the resistance, 105.13, when it's lost, it's lost. It's not showing a sign yet that it's going to end up doing that. And you're getting back up out of the euro, which even went through yesterday's low. So now you're coming back to the other side of this market. In the British pound, you rallied right into the resistance, the 18-day average of closes. So when you have a bear market and it corrects, what's the neutral number on a chart? What's the line in the sand? Regular of you that view and have been watching me for years doing this, you know that that's the number. That's your neutral number. So when markets get corrections in bear markets, they often go there. If they don't hold it, watch out. All you did is get your correction, and you may resume coming back down. In Bitcoin, we are stuck at that number. You're just drifting sideways, momentum down, trend down. Will it accelerate and take us down there? That's going to be the biggest question. We've already seen on FTX, another one of the head honcho men have pleaded guilty on all the charges. So Sam Bankman-Fried, you know where he's going. The question is, will he be having gray hair when he comes out? And probably if he has hair. In Brent versus WTI, market comes up, going sideways in it right now. And you can see how the market is just going to fight here right at the 18-day average. Now, you got up high enough over that high where actually I now have to have a blue arrow pointing up. You have a higher high, lower low. I just missed doing it. I knew to do it and I forgot to do it. I did it on WTI, but I think you got high enough there to do it. I have to double check it. This one, you're out of your downtrend. You're not in an uptrend. You've had your bear market rally back to the neutral spot here. You've had your bear market rally back to the neutral spot here. And this 83.99, my memory, I'm taking, what is that, Provolone or whatever they call it from memory? 83.99 and 83.99. I know they're double tops. I was looking at it going, wow, that's interesting. Exact ticks. We'll see what goes on there. In Rebob gasoline, you're no longer in the bear trend. So I told you I was looking for this. I think you're at the beginning stages. I went today looking at options on June gas and May gas. There's no volume in them. They're not tradable. So you're really just stuck, as I see it, working with the gasoline futures contract. I do think, as you know, we're going to get a spring-summer rally. I think you're going to have a very difficult time getting back under that low. I truly don't expect it to happen. I expect a couple of false starts here as the market tightens in ranges, but I have a definite bullish bias for that time frame. And in the nat gas, you're now running out of momentum on the upside. You've gotten high enough where the pros, this was all short covering. I'm not convinced you've turned the corner in the market, but I'm no longer in the bear camp either. I am nothing in this market, waiting on the next set of events to take place, and you have one of these, and we're going to talk about it. I have the live webinar this Thursday. So if you haven't gotten an invite from me, it means you're not on my mailing list because I've sent them out 2 or 3 times already. Just click up here, fill out the form. When you click the icon, there's a form that'll pop up on another web page for you. Fill it out. You'll be sent your user ID and password after you do so. I open the webinar at 12:15 p.m. I begin promptly at 12:30 and I end at 12:50. It's 20 minutes of your time. I don't care if you come in at 12:25, 12:30, 12:35. Whenever you come in, but we're going to end it just like I said at that particular time. So just click up here. You'll be able to join. I'm Ira Epstein. I'll see you all tomorrow. Take care.